Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the New Zealand versus US dollar. Today's date, November 28th, 2023. The Reserve Bank of New Zealand will have their interest rate decision meeting, an announcement at 8 p.m. ET in the U.S. The expectations are for the central bank to keep rates unchanged at 5.5%. That would be the fourth consecutive meeting that they kept rates unchanged. After moving up to 5.5% 4 meetings ago, they started the tightening cycle at the end in 2021 with the rate at 0.25%. So they've already gone 5.25%, and we'll see what the decision brings. In the meantime, we'll take a look at the technicals and the key levels that are in play that might shift the bias either more bullish or more bearish for this currency pair. So I'm going to start off by taking a look at the daily chart. And if you look at this, the price action here, there was a high yield back here in the month of July, and the price trended more to the downside, breaking below this trend line right through here. That gave the sellers more reason to sell, but the momentum could not be sustained, and we quickly rebounded, and that really started the rotation to the upside. Now, admittedly, it went up and it came back down, and then it moved more to the upside of late in a more trend-like move, but there was the share of ups and downs, including this last test of the 100-day moving average. That's the blue line in this chart. Holding that level gave the buyers a go-ahead, and over the last 1, 2, 3, 4 trading days, we've seen a continuation to the upside, with all the days moving higher. In trading yesterday, the price closed above the 200-day moving average. That was the first time that it closed above that level since, I guess, either here or here sometime in the month of July. Getting above that level and closing above the level was more bullish. And although the price moved lower in the Asian session and back below the 100-day or 200-day moving average, it did gather some more steam with the dollar selling its push away from that 200-day moving average. Now, also in play right at the 200-day moving average, if there is the 50% midpoint, that is of the move down from this July high to the low price that we saw in October, and the inability to, and the ability to push away from both the 200-day moving average and the 50% retracement is a dual reason why that level becomes the most important level in trading on the downside going through the Reserve Bank of New Zealand decision. If the bias from the bank is a little bit more dovish, if you will, and the price moves below both those technical levels, that would increase the bearish bias. And after traders looking down toward the bottom of this swing area at 0.60547, break below that level, and we'd be looking toward the 38.2% retrace, the broken 38.2% retracement of the same move to the downside here. That level comes in at 0.6016. And finally, we'd look at the 100-day moving average down at 0.59905. And so that would be the progression to the downside on something more dovish from the Reserve Bank of New Zealand that gets the ball rolling in that directional bias. Until then, the bias is, you have to give the credit to the buyers. Why? Because we're above both the 200 and 50% retracement, and that tilts the seesaw, if you will, from a more bearish below those levels to more bullish above those levels. And on the top side, what we look for the 61.8% retracement of 0.61674 as the next target to get to and through, and that would bring the price back more into the middle of this trading range here, where the price traded up and down over an extended period of time. Each of these dashed lines represents a month of trading. So that's a long time where the price traded to the downside, and then to the upside, and then back to the downside, and back to the upside. You get the point in this price action moves in this currency pair. That would getting above the 61.8 just increases the bullish bias and would have traders thinking, higher levels for this pair. It could really stop at any place, but one of the levels that we probably look toward is right around here, in between the 62.58 and 63 levels. It's called around the 75 level. That the price action would look toward that level level on further upside momentum. So for now, however, we're sitting between the 61.8% retracement on the top side and the 50% retracement of the 200-day moving average on the downside, and the market's waiting for the next shove from the interest rate decision from the Reserve Bank of New Zealand. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.